really kind of want to go over point by point. I don't have a huge, PowerPoint or anything. We're just going to go over point by point, and I want you guys to ask questions. It's going to be open, but I want to go over because what I went over in the video is the top 7 tips for business owners. So the first one that is going to be is, let's see, the QBI, so qualified business income deduction. That is currently 20%. That is going up to 23%. So what is the QBI? QBI is the deduction that you get as a business owner. So let's just say you make 150,000 in revenue, you have 50,000 worth of expenses, that leaves you 100,000 net profit. Well, you get a 20% deduction on that net profit with the current QBI, which will give you a $20,000 deduction. Well, now that number is going up to 23%, at least once again in the proposed bill. So a bigger 3% deduction for business owners before you get taxed on, your net profit of your company. So that's a really, really good one for business owners, because actually the Tax Cut and Jobs Act that was passed in 2017 that actually got us that first QBI, that 20% deduction. So now we're going back, increasing on that, going to 23%. So that is the very first one. Any questions on that one? And like I say, if you have questions that come up, let me know. But that's a good one. Gives us a bigger deduction on your, business profits. So the next one I have is we are going back to 100% bonus depreciation. So what bonus depreciation is, it means that any vehicle you buy, any large equipment you buy, basically think of any big ticket item that you purchase, you can depreciate it at 100% in the year that you buy it. Typical depreciation is, perfect example for a vehicle. So let's just say you buy $100,000 vehicle. Well, typically the lifetime span of that vehicle, say 5 years, because the vehicle you're going to use for more than 1 year. So you have to break that depreciation expense up over 5 years. Well, bonus depreciation means no, you can take that full 100% of whatever you bought and write it off in the current year. And so, as of standing of the current bill, that is actually going to be active for all of 2025. So it goes back to January of 2025, to where now you get